G'day everyone, welcome back to Pete's Investing. Today is March 24, 2023. This is the Nat Gas price update. Nothing really has changed since yesterday. I just want to give you a quick update in terms of where we are potentially. So look, zooming out, you can see here we're still in a pretty strong downtrend according to the CCI 1500, and we prefer that versus the moving average 200. And I always show the moving average 200 of the price chart as a comparison between that. They're very closely aligned most of the time in terms of where they break, where the price breaks below or above that versus the CCI. They're closely aligned. The benefit of the CCI moving average is it's a bit more reliable in terms of early exit. So you can see there, for example, had you exited the trade in this area up here, you would have been, and you're going long, you would have been in a better position than waiting for the moving average if that's your primary indicator of trends. So the CCI 1500 generally gives you a better indicator in that way. So that's on the daily. And what I want to show you now is, again, we're still stuck in this range between that resistance and that support. And I've drawn this, as well as the support and resistance lines, this blue and this red line. I've also drawn, as I said in the previous videos, I've drawn this diagonal ascending trend line along those bottoms. That's a very slightly ascending diagonal. And also this descending diagonal line. Now, as well as that, I'm sort of sticking my neck out a bit here and trying to do an Elliott wave count. So I'm not very good at Elliott wave counting. At least I don't have a reliable track record there. But I'm showing you here potentially what could have been an Elliott wave 1, 2, 3, 4, 5 scenario. So basically on that, it would have been a 1, 2, 3, and then a 4, and a potential 5, which is not yet played out or finished. So basically, if it breaks below these two support lines, then we're looking at a fifth wave to the downside, and in that case, we're looking at least a 23% point, which is around an 1880 level, but more likely we're looking at around about a 38 to the 50% at least, which goes down to about a 100 or a 1000 level in terms of where we might be at a price. As you can see there, it's much below that. We're getting towards zero, which we don't really want to get towards, but see where that goes. Now, that's a very speculative outlook in terms of Elliott wave counts. I've still got a fairly slightly positive view in terms of a bounce from this area. It's been sort of consolidating there for some time. The other thing to consider as well is this fourth wave hasn't really gone high enough in terms of Elliott wave retracement. Typically a wave 4 goes roughly 30 to 40% the size of the wave 3. So if I drew a retracement on the wave 3, we'd want to see it break. We want to see the wave 4 reach at least to the 30 to 40%, which would have been up in that area around the 4,000 level, and it hasn't done that. So that's another area or another weak aspect in terms of this Elliott wave count. Just want to throw that in there just in case some of you came back and questioned that, but that's my belief on it. I don't think it's going to go much deeper, and if it does, it's going to break below this. Then we're looking at this potential wave 5 playing out. Otherwise, if it bounces from there and there is a pretty minor, I would say minor to strong level of support based on those two levels of support drawn there, then we're going to see a bounce from there, hopefully, and more recovery if you're planning on going long. So that's where we are at the moment with natural gas. Again, not much has changed since yesterday. I just wanted to throw that little bit of analysis in there to see how it performs. But otherwise, all the other thing to consider as well is there is a divergence forming on the 4-hour chart. The CCI is breaking to the upside, bullish divergence versus the bearish divergence on the price chart, which is also a minor strength possibly with a potential upside outlook. So again, that's where we're going, but predominantly I wouldn't be going long at this point, or if anything, if it breaks below these levels, I'd be going short. So to understand how to properly trade using the average down approach, reference the links in the description below. Subscribe and like the channel, and if you really like the channel, support us on Patreon. Thanks, and see you in the next video.